Per usual, every on this channel is for educational purposes only and is not intended as financial advice. It's Setup Sunday. Let's take a look at some setups if we have any setups out there. I got something for everybody again. We got something for the holders, something for the cyclers, something for the traders. It gets weird towards the end with some comparison charts. But if we take the holistic view here, undeniably the most important thing is global liquidity is rising. US interest rates are flat. However, global interest rates are falling, and that's also feeding into global liquidity, global spending, global debt and deficit is rising, and that is helping gold, along with geopolitical stuff, undeniably. But gold was already setting up, and when you have TA plus news event catalyst that's in an asset's wheelhouse, you get what you get on gold right now. The conversation I'm having every day with people is, when's the cycle going to end? I want to be able to cash out. I want to be able to get out. And I think you have to not ask that question. You need to ask yourself, what am I going to do in 100 days? What am I going to do in 200 days? Am I going to be here for 4 years? Am I going to be here for 10 years? If that's the case, if you're truly diamond hand long-term holder, you're better off doing nothing. You're better off just sitting on your hands. The probability that you're going to make a mistake is high. But when we see liquidity going where it's going, and we see government spending where it is post-Doge in the US with the Republicans in power, in the near term, there will inevitably be some bumps. But in the long term, as Lynn says, nothing stops this train. So it's going to be harder to push us down in a bear market. It's going to be harder to push us deeper in a bear market. This is for the cycle over talk. It's going to be harder to push us down if we have liquidity rising all around us. Money's looking for a home. Gold is a liquidity sponge. BTC is a better liquidity sponge. Both assets should benefit. We also have the dollar weakening continuously. Even in the face of risk-off rallies in gold, we're not seeing rates on the long end go down. We're not seeing a flight to safety yet. Doesn't mean we won't, but we haven't seen that. So people don't really want the long bond, and or we're just issuing too much of it. It's out of control. So we have the story, we have the narrative to continue this cycle. We have the products, we have ETFs, we have institutional capital. This isn't their first rodeo anymore. You're not getting people Googling what is Bitcoin to a large degree. Most people at least know what it is. They know where to go if they want to express an idea in a trade. And that's the most important part here. If you want exposure, it's very easy to get at all levels for most people in the United States. So dollar weakness is a tailwind, undeniably. Liquidity is a tailwind. Regulatory clarity is a strong tailwind. And we're going to continue to see that in this summer lull period, probably in July when we get some crypto framework stuff. Maybe we get some batch ETF approvals, July, August, into Q4. If there's anything that could help push us a little harder when we need it the most on day 1000 of this cycle, is going to be regulatory clarity like that. And if you're an altcoin or holding alts and you're down on the year still, you certainly need something to get the engine going, because there are too many alts and there are not enough people buying them. And every day they're just inflating themselves away. And we're seeing that in the charts. You're seeing that in Bitcoin dominance. Near-term geopolitical stuff, Middle East war, that's going to be a headwind, undeniably. People are skittish and they're going to sell at a key level. So it is what it is. It doesn't help that, to me, technicals here don't really look like much of anything. We'll take a look at that, obviously, for BTC. Price momentum in the near term hasn't really done anything. Clearly, we're bullish on higher time frames, but on lower time frames, we're just treading water here, which in a vacuum is fine. But when you have negative catalysts in front of you in the ultra near term, that may help keep us down or push us lower in the ultra near term. It's just, again, we're fighting this huge liquidity tailwind that, okay, like you can push us down on a weekend, or you can push us down to 97 in June, but it's just going to be hard to keep us down here when the print machine is going nonstop globally. We've seen inflows pick up. We'll take a look at that. It should be tailwind, not headwind. We will fix that live on the video. Main Street attention really isn't there as far as metrics we care about. Retail really isn't here. We can take a look at that. We are seeing an uptick in businesses going public, Circle being the biggest amongst them. I would say that's a tailwind because it brings attention to the space. I don't think Circle is a great trade. I don't think it's a setup here. I don't think it's an investable business personally. I wouldn't touch it at all. But what it does do is tell people, hey, we exist, this thing over here. And we'll probably see more of these coming to market, BitGo, Gemini, Kraken, eventually over the next 6 to 12 months. But it's a very good sign for the remaining companies that are planning on going public that Circle has exploded higher post-IPO. And we haven't really seen too much on the unlocks front, at least on the Bitcoin side. Miners are hedging a lot. Net long, we'll take a look at that. Haven't really seen too many governments selling generally. So not much has really changed. I'll talk about MSTR. There's a decent setup there to watch. I don't think there's anything to do actively right now. And everything else kind of is just trading the same. Total 2, coin, miners, IWM, ETH, all this stuff looks the same to me. It's trading the same to me. I'll talk about that towards the end of the video. So leveraged beta does not make sense to me here at all. To me, you want to wait till we're closer to pre-breakout, at least on BTC or MSTR or something. It doesn't make sense to me to sit here eating funding, eating margin, eating volatility drag on this stuff. So options don't make sense on any of that stuff to me here either. They just don't. And as a long-term holder, I'm talking ultra long-term holder, the biggest question you have to ask for yourself isn't, where do I think the cycle is? It is, what am I going to do in 100 days? Because based on what we've seen, we've never seen a cycle from the low that has lasted past 1,100 days, which is about 125 days from now. So either the top's already in, we're going to see the top in 125 days, or we're going to keep going. Those are your 3 choices. And what are you going to do? Most people, again, they should probably just do nothing. Most people are going to panic sell some relative low, and then we're going to keep going, and then they're going to panic by the top, and then they're going to panic sell again, right? It's just, you don't want to be that person. But if we look at the previous cycles, historically, we don't have too much left in the tank. I think June, my personal opinion, I think June's going to be a nothing burger. I think July is going to be decent. I think it's going to trap a lot of people. August, September, almost always universally just bad. And then you'll know pretty quickly in October whether or not this cycle's over, because if Q4 is a banger or mildly positive in any way, then that would support the continuation thesis. That would support, we just keep ping-ponging higher. And it's just dumb to me to see these arguments that we have to know today. We don't have to know today. It doesn't matter today. The issue is if we see another 20 to 30% drawdown, it's going to be harder to recover from that just because we're this far out from the cycle low already. Now we've recovered from a couple, and it's not to say that's not impossible, but you just got to keep in mind how many of those are recoverable. And if we're thinking about risk reward and you believe in the power law or you believe in whatever, and your upside is 400 and your downside is 45, from here, pretty good risk reward to just do nothing and come back in January. It doesn't really make sense to do anything here. You're in the middle of a model that's worked decently well. Eventually it's going to break. Maybe it'll be in 100 days. Maybe it'll be in 2,000 days. I don't know. But risk reward here is pretty decent to just hold steady, hold the course. 2-year moving average multiplier also not giving you a sell signal. It's done so in the past pretty decently. If one of these fails, one of these models fails this cycle, they're all going to fail. They're all going to just be underwhelming. So we're going to know pretty quickly what's going on. Pi cycle top, not even close to getting a projection. This is the 111 daily and the 350 times 2 daily. Because we've kind of gone so slow, there's not even a projected time that these would cross like they have previously. So again, one of these days this stuff's going to break. Not anytime soon. Hash ribbons ultra near term look fine. This is just looking at 30-60 day moving average on hash rate. No issues here. Hash rate continues to go to infinity. This is going to hurt miners a lot, publicly traded miners. I think it's a hard business. It's a tough business. And I don't own any miners currently, but that may change if the setup is there. I would probably rather trade leveraged ETH or IWM leveraged than trade miners or coin, because like I'll show, they're all the same chart, really. What you want is what you always want, multiple trades. You want dispersion between the group, and then we can go from ETH to IWM to WGMI to some other alt, but there really isn't a great near-term setup that I can see on most of the miners. MVRV looks fine. Market cap versus realized value. There's not a ton of unrealized profit sitting on chain. It is at a reasonable level. And something else to pay attention to on the periphery would be high yield credit relative to Bitcoin prices. HYG is a good proxy for this, but HYG really follows S&P anyway. And this is also still pretty muted. So we don't look overheated, not by these metrics whatsoever. So to me, as a long-term holder, and that half of my brain, you know how dolphins like split their brain in half and they sleep with one half their brain or whatever. Your holder brain, whatever half or quarter or whatever that is for you, should just be saying there's nothing to do because there really isn't anything to do here. ETFs have picked up quite a bit for BTC over the past couple weeks. This is what I like. I like 500 million, 250 million days, just quiet, right? We don't want a billion in a day. We don't want 2 billion in a day. We're going to see that hopefully in October, November, December, when it's the end. That's when you know it's the end. When we're getting just an insane amount of flows and everybody's here. We're not there yet. It's still an under-owned asset. Absolutely. One thing to note here relative to retail, most of the flows here have been blue, BlackRock. Not seeing a lot of flows in other products. So when retail's here at the end, that's when we'll see flows broadly, I think. Right now, it's mostly just BlackRock. Same thing with the ETH products. ETH flows have picked up a lot on a relative basis for ETH, relative to BTC. They're whatever. But for ETH, these are really good flows. And the green here is mostly BlackRock. But even outside of BlackRock, we're seeing flows pick up a little bit. So it's certainly better than what we were seeing a month or two ago, where it's just flat out nothing for days and days and days. Momentum in price solves a lot of problems. It solves a lot of questions for a lot of people when prices are going up. And that certainly has been the case for ETH on the flows department. Google Trends here, again, another retail metric. BTC is down here at 21. And I love when the people say, the good people, they say, oh man, this is never going to go up ever again. Who's Googling Bitcoin? Like I just did at the open, right? This isn't just what is Bitcoin. This is anything. This is news. This is where to buy Bitcoin. This is any questions anybody has about Bitcoin that's going to get fed into here. So this should absolutely skyrocket once we really get cooking. And I like how this looks here with price at all-time highs. Price at all-time highs, Google Trends effectively at a multi-year low. That's bizarre. So either this is all a massive psyop, bearish divergence, which somebody in the comments is always going to let me know that it is, or this is a lot higher to go. But Google Trends is not screaming at some crazy level. And if we take off BTC here, ETH and Solana also not much going on. Not much going on for either of them relative to what we've seen historically. Seasonality-wise, June tends to be about where we are, just flat, just kind of nothing. And that's okay. 2020 to present, it's been negative outside of 2023. So it wouldn't surprise me to close negative at all for June. July, however, has been very positive, mostly, even before 2020. So I do like 120, 140 for BTC potentially. We'll see what we can get. I don't know what we're going to close in July. I don't think we're going to close at 333K. I think there's a 0% chance of that, but hey, it was a good price target in 2023 when the idea was brought forth by a certain somebody. But I do like the favorable seasonality for June. Now, ETH is another story. ETH typically has a better first half than a back half of the year, has a decent October, and has a challenging next 3 months, right? Certainly more of a headwind there on seasonality for ETH than BTC. So it's good to check the basis real quick. We're at 8%. That's nothing. If the basis rises, you're going to see more ETF flows as people try to capture that ARB. 8% is probably okay, but it isn't amazing for the ARB people. They may be hitting some sort of capacity constraint anyway on the ARB that they want to do, the people who do this trade. But it's important to look at that in case that's what the ETF flows are. I don't think necessarily that's what the ETF flows are right now. If we look at commercials here in the red, on the COT data, still very long, not max long, but very long, very net long. One of the alternative cloud settings here has flipped bearish. I would love to see a TK crisscross up here, but it certainly doesn't say, this is a long right here. This is a leverage long right here. It does not say that yet. It does not say, hey, buy MSTR. Hey, buy some altcoins. It does not say that here. It says, be very careful up here because the trend breakout from April has given you a long exit signal as of today, as of a couple days ago. And I'm backtesting. This thing does very, very well. For ETH, basis also kind of muted there at 8.5, nothing too crazy. And this is an alternative cloud for the ETH chart as well, also giving you an exit signal here in the next couple days after this breakout. And again, I'm backtesting. These settings work pretty well, even though it wasn't backtested on ETH initially. And the positioning data is, I think, the highest in net for ETH commercials as well, net positive. So even for ETH here, there's not a screaming buy me signal here on a lower settings cloud. If we look at the normal cloud for BTC, downside here is key June 97, really nothing going on. You could probably call this a bear flag. You could probably call this a double-headed head and shoulders still. It just doesn't quite look bullish to me. When you break out and then you give it all back and you're back into the middle of the range, that's really not what you want to see. Now, if we're talking inverted head and shoulders stuff, even that, we could get something down to 97. And we could say, okay, this is the neckline. I don't hate that idea for July. I think that if we break out in July, that's how we do it. We survive around 100K for the next 15 days and then figure it out in July. But this doesn't really look like anything here to me. I don't know. Maybe I just, I'm unimpressed, I guess. 12-hour, 4-hour. I don't really see much of anything. It certainly looks more random walk bearish to me than bullish continuation today, right now. That could change when Legacy opens tomorrow morning. Futures are open right now and we haven't sold off, so maybe that's a win. But I just don't see anything super, super bullish. As for ETH and alts, is there really anything here? Maybe there is an ascending triangle that's still alive. I don't hate that idea. Cloud looks decent. This looks better than most alts. As a trader, is there anything here today that's screaming at me? I don't really see anything. You want this above 2,700 again? But as of this moment, it looks fine. Really no issues here. If you want to be bold, you could say maybe this is a giant cup and handle. Sure, I don't hate that idea. But if this starts to break down, you know, it's ETH seeing its shadow and it's back into nothingsville for 3 to 6 months if the cycle's not over, right? So that's, again, what all alts are sort of dealing with here is most of these look tragically awful. Even Solana is fighting off being below the cloud here. What you absolutely want in Q3 and 4 is just stop making lower lows. It's not that hard. If you're truly bullish, you will not be making lower lows. So you don't want to see that for Solana or anything else. Ripple, we talked about a million times. This is perfectly priced. It has gone nowhere since November, and you got to be worried about this now as well. A little bit of a head and shoulders action there. The one alt that has really done well would be Maker. You can throw Aave in that bucket. Maybe it's a stablecoin thing. Maybe it's a regulatory thing. I don't know. But for this chart to look like this in this environment, it looks excellent to me. Continues to look excellent. Continues to play out very, very well. The meme coins, all of them look like junk to me. Doge looks very sad. And you can throw anything at me and it just looks kind of sad. Tau, Sui, Cardano. Outside of a few DeFi charts, most of this stuff just looks like junk. It just does. And Maker BTC, again, I keep talking about this one because the setup here just continues to look better and better. Looks excellent relative to what's going on in the rest of the market. With Sol BTC, right? What does this chart look like? Well, not good. It's in no man's land. It's below the cloud. It's making lower lows. This really has to hold here or it's going to get ugly on a relative basis for Sol. ETH BTC is also probably one to watch along with these other charts that I'm about to talk about. ETH BTC has been below the cloud since early 2024. And if we want to rewind the clock even more, we're talking like 2022, right? So if ETH actually has a bid, we should know pretty soon because this on technicals in a vacuum looks ready to go, looks ready to break out, looks ready to outperform BTC. No question. No question. What would I want to see? I would want to see anything above 0.25. You're probably good to go. But you can see the cloud is starting to flip for the first time in forever. We're starting to get back above the cloud for the first time in forever. This may take another 3 months to actually break out. This could take us into Q4, right? But the expectation here absolutely is that this thing makes some attempt higher, unquestionably. So I'd play that as a trend trade. I'd play it with trailing stop losses, then call it a day. I wouldn't get too fancy with it. We're not quite there yet. Now this looked good, admittedly. This looked good back here. Looked really good. It just didn't go anywhere, right? Just broke down. So you don't want to see lower lows on this. The trader in me wants to see this play out. I want more trades, right? I want to see more opportunities, more setups. So we're almost home free there on ETH BTC. As for the rest of the stuff, again, it comes down to liquidity. If liquidity is higher, gold should move first, which it is. If gold moves, BTC doesn't move with it, typically. Once the gold move is done, then BTC moves. If gold is moving to 3750, where I think it's going, then that's going to be a minute for BTC. That may be 2 weeks, it may be 3 months. If gold goes to 4,000, then you'd imagine Bitcoin continues treading water a little bit and or tries to break down below 100K. But this green line, to see global liquidity continue to rise, should not be bearish for BTC in the long term. Here's the gold chart with pivots. There's that 3750 level. If we measure this a couple different ways with fibs, that's this zone. So 3750 unquestionably is the easy TA target based on the inverted head and shoulders, bullish continuation. If BTC looked like this, it'd be an easy trade. It'd be max long. It would be 2x MSTR. It would be everything, right? Full port leverage. But that is not what crypto looks like right now. Crypto does not look like this. And if gold looks good, it's going to be hard for crypto to do anything. Dollar continues to just melt. Really not much else to say here. But the lower this goes, again, it's going to be hard for Bitcoin to just stand still if this continues to push lower. At some point, it's just not going to matter what price is, and it's going to start to break out because that feeds into global liquidity, and that has everybody questioning, okay, should I be holding on to these dollars? It doesn't really make sense if they continue to lose value. They're going to be looking for other assets to buy. Here's a quick peek at the pitchfork. We've been tracking since 2022. Continues to look fine. 20-week moving average down there at like 95-ish, something like that. So we're still plenty bullish. We've still got plenty of room, plenty of upside, plenty of TA justification for continuation here. You got to pivot at 122 and 150. Those would be the two levels to watch within the next 3 to 6 months. I was checking out IBIT. This is with Legacy Cloud. And if you just pull this chart up, not know what it is, what is your first instinct? My first instinct is, well, that's an M double top. That doesn't look good. That's a TKC clamp. That's overbought. None of those things are bullish. So it's going to have to fight off the bearishness that, to me, it looks pretty obvious here on IBIT. If IBIT starts to break 58, if this starts to break down, that's not going to be helpful. Not going to be helpful in the near term when this already looks decently bearish. You obviously want this to hold here and pull up. It may not be tomorrow, it may not be next week, but you just don't want to make lower lows. You cannot make lower lows. Here's the MSTR idea. If we look at everything together, pitchfork, cloud, chart pattern, I don't mind holding MSTR here. I don't have any MSTR currently. If MSTR breaks out above the local high around 400, then it makes more sense to me to start playing MSTR again to the long side. This inverted head and shoulders is similar to spot BTC. They're going to break out together. MSTR may break out first. It may give you a little heads up on what's going on, some alpha. If we break 400, I like a little bit. If we break 425, I like a lot. And then if we break this neckline, if we break the pitchfork, that's where I like leverage. That's where I like calls, that sort of thing, because the target is much higher on the breakout and you have a defined risk reward. Here, we're just kind of sort of middling around, not really doing much of anything. Now, if you're super confident on MSTR, sure, fine, but I just am not. And then anything below 340 on any active trades has to be the stop loss. You don't want to see this make lower lows, certainly, but anything below 340, you got to be really, really careful if you still have active stuff up here, because then we could just be back in the 280s or whatever. So I like ads at 400, 425. I like leverage above 425. Until then, this is just a kind of a nothing chart to me. Coin, also nothing to do. Back in the cloud, not trending, had a breakout, and that's it. It's just ranging, breakout and ranging. Not for me, not here. This is coin against MSTR, similar to ETH BTC. It's really ETH against leverage BTC, but if this starts to break for coin, then ETH should absolutely break higher. So you have a trade on ETH BTC, you'll have a trade on leveraged ETH, you'll have a trade on leveraged coin, you'll have a relative value trade here again on coin MSTR. Lots of ways to express this idea, but as a go signal, you can certainly watch this relative value, which has been death for coin relative to MSTR since 2024, right? This is really when the last time alts outperformed in a big, big way, at least on this relative value pair. And if we look at coin, total 2, and miners, it's all the same chart. It may not be one-to-one, it may not be perfect. Maybe there's some dispersion occasionally between all of them, and maybe miners are lagging here, but they're really the same trade. Me personally, I would rather trade leveraged ETH than miners. I think miners are just they just generally don't trade well most of the time. I don't know who's got more bag holders, ETH people or Bitcoin miners, but you've got plenty of ways to express any idea you want. Just keep in mind, these are all kind of the same trade. They're all kind of the same chart. And we can throw in IWM, which is small caps, Russell 2000, and ETH, which is also the same chart. So to see both sort of fake a breakout and pull back makes sense. They've traded virtually the same for a while. So you potentially have 5, 6, 7 ways to express the same idea, which is just a short on Bitcoin dominance. That's really what we're talking about here. A long on ETH BTC is what we're talking about here. At the end of the day, it's all the same chart. It's all the same trade. Miners in a vacuum. Not really seeing much of anything again relative to IWM. The IWM chart looks cleaner to me, but effectively it's the same trade. Now on a percentage basis, these are different, sure, but directionally, most of the time they trade virtually the same, virtually identical. Both of those kind of back to the breakout area, back to the neckline. I like a stop loss on any active IWM trades around 200, 203, something like that. Still hasn't flipped bullish on the cloud. I still think potentially this has the ways to go to the upside. And especially when we compare that to the SPY or the Qs, both of which look pretty extended to me. So if these break down, BTC is going to have a harder time breaking up. Something else to keep in mind. So lots of little semi-important, extremely important ideas for trader and holder alike. Most people should just generally do nothing until Q4 and then make a decision. That's all I got for this one. Give me a like, dislike, comment, share, subscribe, and happy trading.